Good morning, everyone. I'm Patty Dow, your member services specialist here at the Halifax Chamber of Commerce and your host for this morning. Uh, it is our most favorite time of the year. Tax season is upon us. And as COVID has impacted every aspect of our lives, taxes are no exception. Whether you're an employer or you've been working from home, there have been many changes this year. Changes to T4s, new credit claims, working from home expenses, and so much more. Thank you everyone for submitting your questions ahead of time. And feel free to type any further questions that you have in the Q&A at the bottom of your screen. Our presenter this morning is Lori Harraway, Tax Associate from H&R Block Canada. She's a year-round tax associate at H&R Block, and she's located in the Sackville Drive offices. Lori has 8 years of experience in personal income tax preparation, including small businesses and gig businesses, rental properties, employment expenses, and for those of you who do some US work, she does US taxes as well. Welcome, Lori, and thank you for joining us this morning.
Thank you so much, Patty, for that introduction, and I'm glad to see many people in this presentation. I do certainly look forward to talking to you all. There is a bit of an update at the I actually work in Cole Harbour now during the tax season, but otherwise, what Patty said is pretty accurate, and I do look forward to talking to you today with our agenda. Kayla, could you go to the next slide, please? Fantastic. And next one, please. Perfect. So what we want to talk about today is some of those changes that CRA Canada Revenue Agency has made over the past year with regards to the working from home and other changes that have been made due to COVID-19 and how the T4s have changed and what you need to document these to make these claims. What kind of expenses you can claim if you are working from home. Next. So this infographic here is available on the CRA website, and one of the things I really like about it is how it clearly lays out the changes and how somebody who is working from home due to the COVID-19 pandemic, what kind of claims you can now make as a result. So in the past, to be able to claim work at home expenses, it had to be a condition of your employment, and your employer had to fill out a specialized form for that. For this 2020 tax year, you can use the temporary flat rate method to claim your expenses as long as you worked more than 50% of the time from home for at least 4 weeks in 2020 due to the COVID-19 pandemic. And using this flat rate method, it means you can claim $2 each day that you worked at home for that period. Now, if there's a break, like let's say you worked from home for all the month, and then all the month of April, and then you went back into the office part-time, but you were still working from home part-time, you can still continue to claim $2 a day for any additional days that you did work at home. With that temporary flat rate method, it is a maximum claim of $400, which amounts to 200 days. Okay. Again, this is just for the 2020 tax year that we can make this simplified temporary flat rate method claim. When it comes to what counts as a work day, it is whether you worked all day or only part of the day, part-time from home, you can still count those days. However, you're not eligible to count any days off, vacation days, sick days, or any other leaves of absence. So this simplified flat rate method is great because it's not only simple for you, since you don't have to calculate any workspace details or keep any supporting documents. And it's also much simpler for your employer because your employer doesn't have to complete the T2200S or T2200 regular form. Okay. You do still have the option of claiming with the detailed method, and we're going to talk a little bit about that yet this morning, just for some of you who aren't familiar with claiming work from home expenses at all. Next, Kayla. That's good. So the T2200 and T2200S form, S for simplified. The links are there for going to view those on Canada Revenue Agency website. But basically, it is a declaration of conditions of employment for working at home due to, so normally it is a 2-page form where the questions have to be filled out by the employer. But the T2200S form, which is the new one, is a much simpler form. And we're just going to talk about the differences. Next, Kayla. Perfect. So the two forms, like I said, these are for being able to claim those work at home expenses in a detailed method. The traditional one, the T2200, is a 2-page form with 13 questions on it, which an employee must have for claiming those work at home expenses. One of the conditions for an employer filling out this form is working from home is a condition of their employment. Okay, so it's quite detailed as to the questions that need to be answered, whether the employee is trying to claim the home office expenses or travel expenses, transportation, vehicle costs, etc., all go on that detailed form. For employees who were impacted due to COVID and are working at home but still want to use the detailed method of claim as opposed to the simplified $2 a day claim, we have this 1-page T2200S. So it's a much simpler form where the employee information still gets filled out at the top, and then the employer's, the conditions of employment, it's just 3 questions that need to be answered by the employer. Did the employee work at home due to COVID-19? Did you or will you, as the employer, reimburse this employee for any of their home office expenses? And was any amount included on the T4? Okay, pretty simple questions, pretty quick to answer, and then the employer would complete the bottom section with the name of employer, the authorized person completing the form, sign and date it. So it's a much simpler way of being able to claim those COVID-19 expenses, home office expenses due to COVID-19. And there's no requirement that it be part of the employment contract. Next. So in addition to the T2200 or T2200S forms, and again, the T2200S form is only required for somebody who wants to utilize the detailed method of claiming the work from home expenses. If you're just using the simplified method for work from home expenses, you don't need any form from your employer. You're just claiming $2 a day. Where do you claim that $2 a day? Well, that actually goes on the T777S form. There are 2 forms. So the T777 form is your traditional statement of employment expenses, which covers everything from the home office expenses to the vehicle expenses to the work from home expenses. But the new one, the one that is so important, whether you're using the simplified or detailed method of claiming home office expenses, is the new T777S form. So this is a statement of employment expenses for working at home due to COVID-19. It's a 2-page form. Okay. If you're using the simplified method, that would be option 1. Okay. And it is simply claimed by stating the total number of days you worked from home in 2020 due to COVID-19, and then multiplying that amount by $2. Super easy for someone to utilize if they're using that temporary flat rate method. Next slide, please. However, if you're using the detailed method, you need to be aware of what types of expenses you can claim for your home office. Okay. So we've got a list here of the what can be claimed, and on the T777S form, they also talk about expenses that are not eligible. So we'll quickly take a look at them. The big one, the new one, for anyone who's used to having been able to claim home office expenses in the past, the big change is home internet access. So you can actually claim your internet fees now. We didn't used to be able to do that. Yep, right down there. So that's a big change. But otherwise, traditionally, what we're looking at, we can claim any of the utilities, that expenses that you have, along with maintenance and minor repairs specific to the home office space, rent if you rent, office supplies, the employment portion of your cell service or long distance calls, again, for employment purposes. The other thing when it comes to all these utilities and internet, et cetera, that we spoke about rent, it's all about figuring out the size of the space. So how big is your office in relation to your whole home? So if your office is 200 square feet and your whole home is 1,000 square feet, then you'd be claiming 20% of those utilities. For commissioned employees, there are some additional claims that they can make in addition to the ones that are available to all employees. And that would be things like your home insurance, your property taxes, along with leasing certain types of equipment, okay, for earning that income. So these are all, whether you're working from home due to COVID-19 or as a condition of your employment that you work from home. These are all the types of expenses that can be traditionally claimed. Now, a lot of people wonder if they can claim their mortgage interest or their mortgage itself, and unfortunately, no, those are not eligible. You also can't claim things that are of a capital nature. So changing out the flooring, replacing the windows, upgrading your windows in your home, things like that. Those capital expenses to your principal residence cannot be claimed as an employment expense. You also can't claim the equipment you might buy. So a lot of people bought a new chair or some other furniture for working from home, and those are not deductible either, because those are yours personally and you're going to be able to keep them. Even if you're not doing this job, you're not able to deduct them. Another one is the computer. So if you have to purchase your own computer or your own computer accessories, maybe a new headset, for example, something like that, you cannot deduct any of those expenses. Okay, so it's quite interesting when we look at the detailed method versus the simplified method. For a lot of people, the simplified method is the way to go. Now, when you're renting, you can end up with a larger claim, but very often when you own your home, by the time you save all the receipts, because you do have to document all your expenses, and save all the documentation to support what you want to claim, and figure out what portion of your office represents within your whole home, the expenses don't even add up to that $2 a day that you can claim. Plus, again, like I said, you're responsible for keeping a lot more documentation. But it is always an option, and it's certainly worth reviewing your two options to figure out what is best for you in your scenario when you're working from home. Again, to be able to claim the work from home expenses for COVID-19, you do have to have worked 50% of the time for a period of at least 1 month. Okay. And to claim this detailed method, you would need the T2200S form that is signed by your employer, along with all those supporting documents. We can go on to the next slide. So that is a quick overview of the two new forms, the T2200S and the T777S form. Now, the other changes that have happened are with regards to the T4s themselves. And if you've probably already received your T4 this year, so you may have noticed some additional boxes down at the bottom, or if you're involved in payroll, I'm sure you're already aware of what needed to be reported. But again, for the 2020 tax year, in addition to having your employment income on your T4, we've got codes in the bottom in the footnotes section of our T4 that show when how much income was earned in specific periods. So it's broken down into like roughly 2-month periods, except for the last one, which is basically only 1 month. But there's the 4 different periods, and those relate back to whether or not somebody might have received the COVID-19 benefits. So whether it be SERB or the student benefits or any of the other benefits that you might have applied for outside of working, this is going to show how much working income you had for that specific period. Okay. And not only is it the income from actually worked, but if you had got any back pay during that time, that is also going to be showing in that footnote box there. Okay. Just trying to think if there was anything else on that. That is the general overview of that. So if we can go to the next slide, please. So again, we saw many employers have their employees work from home last year due to COVID-19. Some people spent more time sitting in front of their computer at home than they probably did in the office. We've taken a lot of training through January for our tax updates to make sure that we are ready to answer all your questions, and we do hope you have lots. Before we go over any questions there might be, I just wanted to again reiterate about calculating your employment use of home. There's a good example on the Statement of Employment Expenses, the T777S form, which shows an employee who was working from home at her dining room table, so didn't have a dedicated office space. The dining room itself represents 12% of the total square footage of the home and is used for 40 hours a week for work. However, there are 168 hours in the week, so not only do we prorate the expenses by the size of the space, but also for how many hours it's being used when a space is not used exclusively as an office. Okay, so in that scenario, Sam paid $200 for electricity, heat, and water, and internet, as well as $1,000 for rent. So she can enter $200, the $1,200 of expenses, but to calculate her employment use amount, she needs to take the 40 hours that she works and divide it by the 168 hours in the week, multiplied by the 12%, which amounts to 2.9%. So what that means for those utilities when she doesn't have a dedicated office, her employment use amount will amount to only $34.80. So like I was saying earlier, quite a bit less than being able to claim $2 a day if she's, if that's her total utilities and rent for the month, and instead could have, well, it's not a huge difference if we're just talking about 1 month. She worked 20 days. So, it would be $40 if we use the simplified method, and amounts to $34.80 using the detailed method. So that's just sort of a general difference between the simplified and detailed method. But again, it all depends on the size of space, the number of, and how high those expenses are that you have, which way is going to work best for you. Next slide, please. So we do want to let you know a little bit more about H&R Block and what services we always offer. Okay, we do always offer a review of the prior year. We call that a second look. Whether you prepared that return yourself or used another service, there is no cost for us to take a second look and see if we can find you any more deductions. We also always offer tax advice. So we take calls all the time to help people answer questions that may be specific to your tax situation. So the last thing we want to make sure you're aware of is the link below, or the link on the PowerPoint here, because that does have a coupon that you can print off to use as a thank you for attending the presentation. So I would love to answer questions if anybody has any.
All right. Good morning, everyone. We're back. Thank you, Lori. Tax season is always challenging I think, for people who don't get into the weeds of taxes. Bottom line is, we want to pay as low amount of tax as possible
Yes.
while maintaining our wonderful quality of life here in Nova Scotia. So we do have a number of questions
Excellent.
that have been pre-submitted. So if anyone has questions, please put them in the Q&A box, and we'll get to them. So, are you ready? Here we go.
I'm ready.
What is the biggest impact that has happened on business for taxes that you're seeing?
Business.
Yeah. That you're anticipating that's going to happen here during tax season.
Yeah, so primarily I see self-employed individuals, so small business. So I think the biggest thing I see is a lot of them, because their income dropped so significantly, they were receiving, they did take advantage of some of the COVID-19 benefits like SERB.
Yeah.
And depending on what news they were listening to, some of them are very, very much aware of how that would impact their taxes and the chances of them owing in money. So they have been setting aside, but they've still been kind of scared to know what that number would look like. And, it is scary. I totally get that. Nobody likes to owe in. But getting owing isn't going to go away just by not filing your taxes. So I think it's a really good idea to go in and find out where you stand. CRA is allowing for anyone whose income is below that $75,000 threshold, when they have a balance owing due to COVID-19 benefits that they received, to have until April 30th of 2022 to pay off that bill. So it's a whole extra year to pay.
Okay.
But if you find out now rather than on April 30th, it gives you that much more time to plan.
Right.
How am I going to pay this back? Right.
Right. Good to know. Now,
So yeah,
does that extended time, is that incurring interest or interest free?
interest free. It's a
Oh,
good
even
question.
better.
Yes. So but again, it has to be, the balance owing has to be due to COVID-19
COVID.
benefits. Yeah.
Okay. Okay. Good to know. We have a question here in the chat box. What happens if CRA audits the flat rate being claimed on a home office? What do I need to show that I legitimately could claim that home office?
So at this point, they haven't given us any more specifics. They said you do not need any documentation. So I
Right.
would assume that the most that that they could ask for proof is, your employer stating that yes, you were working from home for the number of days that you're saying that they support that, because there's no other details required, right? It's
Right.
just, yeah.
So I filed my taxes on the weekend. I probably should have waited till after this session to figure out some of these extra expenses that I've probably could have deducted, but we'll see.
Well,
Sorry, go
what
ahead.
I was going to say is you can always do an adjustment to your tax return too. You do have up to 10 years to file an adjustment. So if you think it's worth taking a second look, you can bring it on in and we'll help you take that
Okay,
second look and discuss, simplified or detailed work from home expenses, if that's going to help you out for sure.
that's great to know, because I think people automatically assume that once you've filed your taxes, there's no going back to having things checked, or, oh, here's another receipt I forgot, a donation receipt. So what you've said is we can take that information and refile it. What was the word you
Yeah,
used?
it's called an adjustment.
Adjustment. Okay.
T1 adjustment is the traditional what we would file, and again, individuals can do it as well, but we're
Okay.
certainly here to help you do that.
Absolutely. Oh, okay. Great. That's great. So, here's another question. What do employees who have received SERB, what do they need to know about filing their taxes? Is there any special forms for them? What do they have to be aware of?
So employees who were receiving SERB, they're going to have their traditional T4 from their employer. And then depending on which type of SERB benefits they were receiving, where they filed through, if it was through the EI, through Service Canada program, or through CRA,
Okay.
through their program, because they had both methods, they'll either receive a T4E or a T4A that shows the SERB benefits that they received. And those original SERB benefits, no tax was deducted because the
Right.
government was trying to get the money into the hands of Canadians as fast as possible. But there's a good chance that, depending on the other credits that you have, there's a good chance that you would end up having to pay something in as a result. No
Okay.
extra forms or extra steps in your tax return. It's just a matter of reporting all the income that you had in the year on the correct line. So it would be no different than if you had some bank interest. You're going to have a line for the bank interest. Instead, you have the line for other income when it comes to SERB. So.
Okay. Next question. I did not provide my employees with a consent form to work from home. So are they still able to claim the benefit?
Absolutely, and that was the key thing with bringing out this 2200S or T777S. So with any employee who wants to just claim that simplified method, the employer does absolutely nothing. No forms required from the employer at all. Now, if an employee is looking to claim the detailed method, then that's where the employer needs to fill out that one-page T2200S form. Where it just shows that, yes, they were working from home and I either I did or I didn't pay them back for the expenses they had as a result.
So are employees able to claim, I think you did touch on this in your presentation. So now towards the end of 2020, businesses were kind of moving back into being in the offices and kind of a hybrid. And so those employees who are still choosing to do this hybrid method, they still get to claim that in that home office expense.
Absolutely. Yeah. As long
Okay.
as they met that 4 week, that 1 month work from home
Yeah.
requirement. And then let's say maybe they went back for a while and then maybe they had to work from home just a couple days, or maybe their
Yeah.
child's school shut down for a couple weeks, some scenario like that. Whether it's because they chose to do the hybrid or, the company as a whole chose that method, they can still choose every day that they're at home, they can claim that $2 simplified method.
Okay.
Sure.
Great. I'm just gonna check. Do we have uh, any further questions? We have a quiet group online here this morning. That's okay. One question I have, and what happens when CRA decides to audit you? What is that all about? Because that seems very stressful.
And
Do people go to jail in Canada because of
not
taxes?
not as a routine thing. Anything's
Okay.
possible, but we would be talking about pretty serious nature to go that far. Generally, they're asking questions, and the thing we have to remember, for the most part, most Canadians are filing electronically these days,
Yeah.
whether it's self or through a tax provider. Um, and when things are submitted electronically, they're not getting all the backup. So
Right.
generally, it's not a true audit where they're trying to pick every detail of your life apart. They want to just the supporting documents to show what you're claiming. So, for example, somebody who um, is in a nursing home, and or maybe not. Let's not go with a senior. Let's go with someone who's working and has kids with um, orthodontics expenses, right? So really
Oh.
high medical expenses, and probably unusual because you don't have them for 10 years. It's like maybe 1 or 2 years you've got this huge medical expense. Siri goes, that's not normal, let's see. So they'll send you a letter saying, we want to see proof. And it's quite simply, that's all it is. You can either upload through your My Account those copies of those receipts or mail them into them, and they review it and they go, okay, yep, you really did spend that much. It wasn't just a typing error or something. And they'll go, okay, no big deal, and move on. That's what most assessments, post assessments, reassessments are about, is just looking for that supporting documentation. Um, I see in the chat somebody's
Yeah.
asking about assistance. So we always offer audit assistance, meaning we can explain any letters that CRA sends to a client. What CRA is looking for, because of course we read them a lot more often, and they are a little intimidating when you're not used to reading them. Um, we have a service called Peace of Mind, that when somebody's doing their tax return with us, if they would like to include that Peace of Mind extended service plan, then that actually gives you audit representation, which means you bring the letter to H&R Block and say, yeah, take care of it. And that's exactly what we do. That's what that representation component then refers to, is that we can submit all the documents on the client's behalf, follow up with CRA, chase it down. So that's the difference between the audit assistance, which, like I said, will always answer questions. The audit representation is a bit of an extra, and if somebody wants that after the fact, we do charge $75 an hour,
Okay.
because it can be quite time consuming to chase the government down, right? So.
Yes, definitely. Oh, we have another question in here. Someone had dental work done February 2021. Can they claim this on their 2020 taxes, or do they have to wait till 2021?
Unfortunately, you have to wait till 2021. So you have an ability with those medical expenses to move the tax year, or move not the tax year itself, but move when your medical claim is, as long as it's a 12-month period that falls in the calendar year, but you can't go into the future. You can only go backwards. So let's say they had those dental work done in November of 2019, and with all the craziness of the pandemic, forgot to claim it on their 2019 tax return. You could make your medical expense tax year from November of 2019 through to October 31st of 2020, but we can't go into the 2021 year. Those ones would have to be saved for your 2021
Okay.
tax return, so for next year.
Okay. So what are the best tax tips you can give us to helping us save money?
Ask questions.
What are some of those hidden tax deductions that you see as a tax expert that the general public don't think about? Is there, one or two of those claims that, yeah, you can claim that as a tax deduction?
Yeah, the one new one that came up this year that I thought was really exciting was digital subscriptions. So if you subscribe to a digital media, the Globe and Mail or some other digital format for getting your news, that's a new deduction. And like I said, because it's new, I think a lot of people are unaware of that. But if we're trying to support good media in within Canada, it's nice that we can kind of get something back out of it too on our taxes. The other one, I think a lot of people when it comes to doing donations, claiming those donations, there's a couple things around that. Number one, you can save your donations for up to 5 years. So when you have donations of over $200, you get a larger tax break than when it's less than 200. So the first 200 is a 15% tax break. When it's over $200, it's a 29% tax break. So almost double. So if you have a good storage method and can safely keep those receipts for up to 5 years, you can get a larger tax savings by saving those donations up. However, on the flip side, people need to be conscientious of what they're trying to claim for donations. It has to be a recognized charitable organization, and the receipt will show you that charity ID number. I've had a lot come in this year, people doing GoFundMes,
Right.
which is not a charity. Or the other one that we see, and we see this every year, is like the QE2 home lottery.
Right.
Because it's quite an expensive ticket, but
Yeah.
it is a lottery ticket. You have a chance to win a prize, therefore you're not making a donation. So
Okay, good to know. Good to know. We do have a question here, and this one's here. You got to strap your seatbelt on for this one. This one's TurboTax. Your competitor, one of your competitors, but hoping that you might be able to answer this for our guest. So, they have a work from home paper signed from their employer. They're using TurboTax to
Right.
file, but they can't find the spot where to claim it.
Yeah, and I don't know, I know our software that we use in Office, but even the at-home software that H&R Block has available to clients is set up quite differently. So I don't know where exactly it would be. Now, most of those at-home softwares do have some sort of search engine, so you could, look for that work from home expense, and a lot of them offer some sort of chat assistance as well. So unfortunately, I don't know specific softwares where where those little details would go on. But
I can
have you
answer
seen
that
it?
one. I
Good.
can answer that one. I use TurboTax as well, and the difference is if you're using the online version or a downloaded version. So if you're using the online version, which is the free version that's on the CRA website, you can click and use TurboTax to file your taxes.
H&R Block the same.
You
We
can't
have,
find that form on the free online TurboTax. So if you purchase and download the software to your computer, you can easily find that work from home claim. So that was a lesson learned for me on the weekend.
perfect.
Taxes. So some of the free, it's great if it's a simple tax, 1T4, submit, go. But that was an experience that we had on the weekend when we did our taxes, for sure.
Excellent.
There you go. H&R software has it under the employment expenses. Thank you. So don't use TurboTax, use H&R Blocks.
Perfect. Thank you so much. Yeah, no, because I know our free software, we could do the, like you can even do self-employed. I've done that with when my daughter was doing childcare at 15, 16, and we wanted to get her started on filing taxes. We used the at-home software so that she would know what tax returns should look like. So I thought it should be on our software, but I hadn't played with it yet this year.
each software is a little bit different, right?
Yes,
So it is about
absolutely.
going and looking and digging, and it's great that CRA has these links right on their website to use an online filing software.
Absolutely.
But there's always don't quite have all the things you need on the
Right.
free things. We have one
Yeah.
last question, Lori,
Excellent.
for you. If you have a rental property and place it on the market for sale, can you claim the utilities, property tax, insurance during the time that it is on the market until it's sold? So can you continue to claim all those expenses until it's sold?
Yes and no. So you wouldn't be claiming that against your rental income because you're not renting it. If you're not I'm assuming the reason it's being asked is because if you've stopped renting it out, but you're listed it for sale. So assuming it's vacant, if it's being rented out the whole time until it's sold, of course you can claim all those things, same as any time that you're renting. If it is vacant, then those expenses would go against, any capital gains you might have for when you sell the property. So you have a price that you paid for the property when you purchase it, you have a price that you sell it for, and then there would be some expenses, while you're trying to sell it that would be deducted from that final selling price, and that would also including the utilities and such. It would also have your expenses with legal fees and real estate commission and stuff that would all be deductible. So hopefully to reduce your capital gains, so you wouldn't have a lot of taxes payable on that sale. Of course, it all depends where you are, because some properties are really flying right now for over asking price. So that could be a whole other story.
Absolutely. Absolutely. I think that's all the questions we have, Lori.
Okay.
One last, if anyone in the audience out there has a last minute question. I don't see anything. So I guess we'll wrap up. And so please remember, you can reach out to Lori or anyone at H&R Block. They're here to help us navigate the tax world of especially COVID and all of the everything. Everything that's happened during COVID. I just want to remind everyone that Thursday is the Business Awards, and they are being we're doing it virtually, and it is free. We're doing a live stream, so we encourage people to jump online and congratulate all these amazing businesses for 2020 or 2019. The webinar that you've been participating in is being recorded, and it will be available on our YouTube channel probably by mid-afternoon. And we want to thank everyone for joining us today. Kayla has put the Business Award link in the chat box. Check it out. We have some amazing businesses who've done incredible work. And we want to celebrate them as we continue to move beyond COVID and get back to business. So thank you again, Lori, for
Thank you
all
so
of
much.
these great tips. And we want to wish everyone a great day. Thank you
Thank
for
you.
joining us.
Thank you, everyone.
Bye.